Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Shorab Bhattacharjee. In today's video, as part of the Mark Douglas's Trading Psychology, I'm going to discuss 10 culturally learned behavior that results in unsuccessful trading behavior. So please watch till the end. In an emotionally charged market situation that requires split-second decision making, where you need to compare the previous market experience with the present event and make a decision right at the present moment. The present moment is very immediate. Now you tend to make the similar mistake that you had made in the past. You do not seem to learn from your mistakes and implement on your present event, and when you see that you just repeated the same mistake that you did a year back or 2 years back, if you are in that situation, this is high time for you to understand that you got to work on your trading psychology, your trading mindset. You might have a brilliant plan in terms of technical analysis, or your fundamental analysis is spot on, like you know how to read balance sheets, you know how to read cash flows, and you can predict situation, and you can understand that these are the aspects in which the market condition may improve for certain companies. But then if you don't have that right mindset, you would tend to make similar mistake that you had made in the past. So I'm going to bring in 10 culturally learned behavior that results in unsuccessful trading behavior that you can change immediately, because that is within you and that is within your control, for which you don't have to depend on anyone else outside. You can do it on your own, and this is called self-improvement. And if you can do that, if you're able to do that, you would see there's a huge difference on your equity curve, because now you're able to successfully manage your trades, and you can manage your trades efficiently if you have that right mindset. The following typical trading errors that I'm going to discuss, which Mark Douglas has described in his book, The Disciplined Trader, it has that deep-rooted psychology or the methodology that causes you the trading disaster. Refusing to define loss. We do not tend to define our loss. Though in our mind we know that we have to lose to gain something in the future. But when it comes to defining your loss, we don't do that. And that causes us disastrous result in the stock market, because if you are not able to define your loss, you will not be able to get out of a trade flawlessly. And if you're not able to get out of a trade flawlessly, there is no point that you can earn potentially unlimited returns, because then again you'll have the same problem that you'll not be able to get out of a winning trade flawlessly. Not liquidating a losing trade even after you have acknowledged that the potential of that stock has greatly diminished means, because you have defined your loss. Now when it comes to liquidating that, and when it comes to hit that sell order, because you have identified, you have acknowledged that the potential of that stock has greatly diminished, now it is time for you to get out of it. You are not able to liquidate that stock flawlessly, means that you still have that optimistic mindset that it might bounce back from here on, and you might lose some money, because if you take that loss right now and the stock may increase 10% the next day, you would think that it causes you pain, because you might have seen that in the past, that when you got out of a trade, then it bounced back 10% the next day, then that emotionally charged mental memories are playing in your head like a CD, and you're not able to flawlessly get out of that trade. So you got to change that. You got to break that barrier. Of course, you have to compare the past experience with the present event and make that split-second decision. But then if you are defining a loss, stick to it. That's why it is very important to have a plan in hand before you even buy a stock, that when you're going to liquidate, if it is not working out, when you're going to liquidate, when it is you're on a winning trade. You have to define your profit target. You have to define your when you want to get out of it when it is not working out. So you have to be able to flawlessly liquidate a stock when you finally realize that the stock's potential has greatly diminished, and you have to do it flawlessly. If you're not able to do that, you will be stuck on that losing trade, and that happened with me in the past. And I know this from my experience that I was not able to liquidate it because that optimistic mindset always sort of in the background that it might bounce back, and I was stuck on that for a very long time. I'm talking about Bitcoin. I bought Bitcoin back in 2017, end of 2017, when it touched to 20,000. From 20,000 I saw the journey from 20,000 to 3,000, and I could not get out of it with a hope that it might bounce back, because I was watching news and I was so optimistic with so many FOMOs in the market that it will go 1 million and this much amount, that much amount. I was totally into all that bullshit and I had no plan whatsoever. So I'm telling you from my experience that you have to define your loss, and when it comes to executing that plan, you have to liquidate flawlessly. The next point is getting locked into a specific mindset or a belief about market situation. So you have to understand that the market is dynamic and it changes on a regular basis. You will never be able to understand, or you cannot have that same belief that you had a couple of days back. You have to continuously change your belief and update your belief while you're interacting with the market, because the trend keeps changing and you have to be with the trend. Because see, you are just a retail investor or a retail trader. You do not have that capital to move the market, right? Now, when you cannot move the market, the best that you can do is to go with the trend. And how can you do that? It's always by updating your belief. So you cannot hold on to a belief that the market is bullish and you're going to invest all in, right? Continuously invest in. You have to look at the market. If it is bearish, if it is giving you that sign that it is bearish, you have to accordingly plan your trades, and then you have to be defensive. So you cannot have that offensive mindset all the time, right? You have to play with the market. You have to understand the market, and the best way that you can do that is by continuously updating your belief and not stuck onto your old beliefs that So let me give an example. So currently the IT sector is in a bad shape, right? Globally, Amazon, Facebook, our Indian market, Wipro, you see all the stocks, they're not performing up to the mark compared to the other sectors. Now, if you have that belief that IT sector will bounce back, of course it might bounce back, but then if you're stuck on this belief that this is the time to invest in, you might do that, but you have to go with the trend. You have to follow the trend. If the trend is not with the IT sector, then you have, if you already know that the trend is not there with the IT market, so why are you stuck on to your old belief that the market will go up? It might be your plan that you are looking for discounted price, right? And all the IT stocks are presenting with you the discounted price. That's fine. If it is part of your plan, that just go with it. But if you have that mindset and that belief that it will bounce back without acknowledging the trend that it is not currently performing well. You have to be very flexible when it comes to interacting with the market, and you cannot have that rigid mindset that this is going to happen and this is what you feel will happen. That means what? You're trying to set an expectation for yourself that you're right and the market is wrong. So the market is always right and you just have to go with the flow. This next point is very important, which is focusing on the price and the monetary value. Means, let's suppose you invested 1 lakh rupees in a given stock, right? And then when it came down a little and you averaged down and you are now, like I said, 2 lakhs rupees, you have invested 2 lakhs rupees on that given stock. Now you are continuously calculating at which point you're getting out of it. You are not focusing on the trend. You're focusing on the monetary value, that if it goes at that price, at that level, you would get out, you would get this much of profit. You're just making things up in your head. So you have to be hyper focused on the present moment, which is the price movement. You have to look at the price movement and the market condition at the same time. If you're just stuck onto that monetary value, that this much amount you would gain, this much amount you would lose, just focusing on that price, that would not serve you well, because then you're stuck on the price movement and the monetary value versus what the market is currently doing. If the market is bullish or bearish, right? You have to look at the trend. So you always have to look at the market, and you always have to go with the trend, and you cannot stuck onto the monetary value of a given trade. Now this next point has caused troubles to so many great traders and investors in the stock market, which is revenge trading. Now if you are doing revenge trading, that means you are trying to prove that you are right and the market is wrong. Meaning that you have a certain belief that market will go up from this point. And if it is going down, you will revenge trade and you will try to double in all the amount, and you would try to think that you are right, and you are hoping that you are right. Because see, you cannot be right if you don't have enough capital to move the price up from a given level. Then you cannot control the market. There is nothing that you can control versus just going with the flow. And if you have lost money in the past, again, losing money in the past can cause us psychological trauma. And we are stuck onto that old belief that we have lost this much amount at that because the trade played out like that. So you try to revenge trade and try to get the money back from the market. If you have that mindset, I'm telling you, you will lose all your capital. So you have to forgive yourself that you had a losing trade, you did wrong, you acknowledge your mistake, and you follow the plan which you have currently, and then just go with the flow. Go with the market trend. If it is giving you the signal to buy, just buy. Just have a clear plan that at this point you'll buy, at this point you'll sell, this is your stop loss, this is your profit target, and this is it. You don't have to even look at the price movement all the time. Because if you look at the price and if you look at the news, if you continuously be checking the market price in the portfolio, you would trigger your psychological trauma that you had in the past of losing money. So you have to forgive yourself first, and then just be present with the current scenario, and just be with your plan and just stick to your plan. That's the best you can do. There is nothing that you can do, and I'm telling you, if you stick to your plan, you will earn potentially unlimited money. What is the plan, right? To cut down your losses early, and then grow your potentially unlimited returns on those stocks which are working out well. And if you have, let's say 10, 12 trade, 15 trades, maybe 2 of them would work out. And you have to take them along with you through the journey, and you have to have that mindset to grow them to unlimited returns. And those which are not working out, just cut them loose. And you have to be able to do it flawlessly. If you're not able to do it flawlessly, that means you're still stuck onto your old belief. Not reversing your position when you clearly see that the market is going down. Now, when you see that a stock is in a downtrend, you can clearly see that it is in downtrend, but you're not able to identify it because you're stuck onto your old belief, because you have that optimistic mindset that it will bounce back. So when you clearly see that it is in downtrend, why are you in this trade? So to be able to reverse your decision that it is not working out. So you will be wrong most of the time. So as a retail investor, you will make a lot of mistakes, numerous mistakes. Now how you react to those mistakes will define you as an investor. If you want to be a great investor, you just have to acknowledge every time when you're wrong. And just do whatever it is required for you to do. If you have to get out of a trade, just do it. Just reverse your position, and you have to do it flawlessly. This is a business, right? So you have to treat this as a business and a long-term business. Now, these are the opportunity costs to find out whether the trade is working out. And you have to have that small margin, right? That, of course, the stop loss. I'm talking about the stop loss. I'm talking about the at which point you would take out your loss. So if it is not working out, that is the opportunity cost to find out whether the trade is working out, right? And if it is not working out, you just paid the cost and you got out of it. So for a business, you have to pay a certain amount. You have to invest a certain amount. So that is your investment amount. That to find out whether the trade is working out or not. If it is not working out, just okay, that's fine. You'll get out of it. You'll find the next opportunity. And when it is working out, you have to make sure that you're stuck onto it. Not following the rules that you have set for yourself is the next point. Now you have created this wonderful plan. Now when it comes to executing using that plan, you're not able to move in flawlessly. Means that when it is time to hit that buy order, you are stuck in your memories and all the amounts that you have lost in the past, all those would trigger in, and you are sort of you cannot move, you cannot just click on that buy order. So that is refusing to act on your plan. So if you have a plan, you just have to flawlessly come and just click the buy order and just click the sell order. That's it. That's you. So this is like a mental trauma, the psychological trauma that I'm talking about. That is what I'm talking about. Culturally learned behavior that results in unlimited losses. Because if you're able to cut down the losses, then you would have the potential to grow a couple of them out of 10 or 15 trades, to grow them into unlimited profits, and those can offset whatever amount you have lost and can give you triple or 10x or 20x or 100x returns than what you have lost, if you're able to manage efficiently all the trades. The last point is pretty significant, and that's what I did numerous times. So I had created very good trading plan and strategies, and I used to have that consistent run in the market, and I used to win good amounts, like a consistent income, and then I give it all back in just 1 or 2 trades. If you have done that, it is time for you to come back to the present moment and understand what's your plan, and you have to stick to your plan. Whatever the market condition is, you cannot discriminate your plan based on different market condition. You have to have a plan irrespective of what the market condition is. Market condition can be anything. So again, if you are a technical analyst, you cannot watch the news. You cannot see of course, for your own interest, for your own knowledge purposes, you can check the news, and you can check the geopolitical conflicts and all those things that are going on, but then that cannot influence your trading decision, because you're purely a technical analyst, and you cannot suddenly change your plan by just watching the news that war might break out and the market will fall down. Does the technical chart give you that indication that there might be a bearish moment? If that is so, then you might act on it, but you cannot act on your trading decision based on whatever you saw in the news if you're a technical analyst. And similar for a fundamental analyst. If you're a fundamental analyst, and if your decision is based on news, geopolitical reasoning and whatnot, right? You cannot look at the technical chart. So those are conflicting behavior that can result in unlimited losses. So to win unlimited profits, you have to cut down these behavioral aspect that can potentially cause disastrous result, and that can potentially cause unlimited loss. I hope you like this video. If you do, please hit the like button, share this with your friends, and I have a lot more to share on this playlist of Mark Douglas's Trading Psychology. So please subscribe to my channel, and I'll see you on my next video. Thank you and have a great day.